Let's talk about Trent. Trent had an investor day, I think, and quite a few notes have been written on it. Mangalam's joining in. Mangalam, I read one of the notes, correct me if I'm wrong, but I think one of the headlines from it was the company is saying 25% is a good run rate for top-line growth on a sustainable basis. Is that right?
That is correct. So that was one of the key takeaways where they said on a sustainable basis, which is over 5 to 10 years, etc., 25% CAGR is a good number to look at. And that is actually what long-term analysts of the company would expect as well, because you can't expect a company of Trent's size to keep compounding at over 40% in terms of sales. They see a fair amount of headroom for growth as well. The key triggers for them, this time around they didn't give any numbers, as Trent doesn't anyway. It was just some thought process that the street liked. Strong backward integration in supply chain. 73% of their own brands sell in stars, so there is a high proponent of that. And they are seeding new brands as well, Utsa, Samo and Zudio Beauty. There are 3 emerging growth categories which we all know of. There is footwear, there is innerwear, there is beauty as well. So on the back of all of this, brokerages have written, Motilal Oswal has a buy rating, target price of 6,900. They believe that back-ended strong store additions in Zudio should aid growth in FY26, but they will keep monitoring the recovery in same-store sales growth for both their grocery formats and their fashion formats. Macquarie says that they have the highest target price on the street at around 7,200 rupees. They say quick commerce and limited success of private grocery brands makes them a little cautious on the star format, but they are positive on the Zudio format. Jeffries says that organic growth is something that the company prefers over M&A, and the focus is on propositions which are repeatable. So as of now, the company is, showcased great growth in Zudio. Can other formats replicate that growth or not is something that Street will be watching out for the next leg of up move that we will see on Trent. Otherwise, 25% CAGR continues.
No, it's a very interesting point, Mangalam. Thanks very much for that. And I think with Trent, the stock went through first the correction once the market realized that, they can't do 50% every quarter. But since then, this new realization and this investor call from the lows, Trent has put on $1,000. So it's been a steady recovery from the lows that the stock hit in April. It had gone down to about 4,700, and it's kind of recovering, maybe adjusting to a new reality.